London-listed Ascent Resources, the European-focused oil and gas exploration and production company with its flagship asset, the Petišovci field in Slovenia, has announced that it's commenced production. Colin Hutchinson, CEO of Ascent Resources, he joins us now. Colin, welcome.
Hi, thank you.
Congratulations, because this is obviously some time in coming, but now it's here, 45 million euros later. I want to get onto the production in just a minute, but you've also had a placing recently as well. I think you've, your £1.5 million has come onto the balance sheet, hasn't it?
Yep.
At 1.66 pence.
Yes.
Why?
Well, essentially because it's taken us a little bit longer than we'd hoped to get the gas flowing across the Croatian border. We ran into some bureaucratic issues. I'd expected to be up and running to ENA sometime during the summer. We're now in November and we've just started getting gas flowing. So obviously we've spent a bit more than we'd anticipated on the capex, and we've also had to fund the working capital for a little bit longer. So it was prudent, I think, to try and repair the cash balance to ensure that we didn't start production and then immediately run out of money. Yeah.
Okay, so that's giving a little bit of a buffer. I'm interested as well at the price you put the placing at it, because it's substantially below the share price.
It was, but I think if you look at the price at which other companies have raised money recently in similar placings, it was probably towards the better end of the discount. It was in line with what we'd raised money at back in February. It was 1.5 million was raised, which is relatively small compared with the market capitalisation of the company. And I guess the big thing for me and why we did it through primary bid is it's open up to our existing shareholders and to private investors. We're a retail shareholder-owned company, so it's open up to all of those. Instead of going around a few offices in the city and giving away a discount to those guys, it's open up to the shareholder base. And I was pleased to say that the vast majority of the placing was taken by private investors. No institution got more than 50k. So if the discount was more than people wanted, they were able to phone up or get onto their smartphone and subscribe to the placing. So it had to be done to ensure the company didn't run out of money as soon as we get into production, and it was done through primary bid to open up to all our shareholders. And I think the placing discount was to the better end of what we've seen similar offerings go off at recently.
Yeah, but let's get on to the production side of it now. How long is it going to take before you get your first money in from this production that started?
It's a fairly standard contract. So at the end of November, we'll send our partners will send an invoice across to ENA, and within 30 days we'd expect to have the cash in the bank. So, and this should now be the way things will operate. The ENA contract's set up to run for 12 months from first production. It's set at an upper and lower limit. We'd expect revenues to Ascent to be somewhere in the region of 300,000 euros a month. So we'd expect now to be able to build up our cash balance and become profitable on the back of this contract.
So what do you see now as the next draw on the money that you've got on the balance sheet with this 1.5 million and also the money coming in? Where do you see the next big expenditure coming through from?
Well, really, the Slovenian project now should start to generate cash, and that cash will start to come in from around the end of November, beginning of January. That the cash balance will start to build. So that money we took in the placing is to fund some of the capex hangover from PG11A and from the infrastructure we're constructing, and to keep us going working capital wise to the end of the year. So there's no major draws now on the cash balance. The next big expenditure in Slovenia is likely to be when we start to re-enter some of the existing wells, or when we start to build our own processing plant, which we're still going down the IPPC permitting route for. I mean, the first well, we may have built up enough cash to pay for that out of our own resources, and we'd also look then to fund some of the further development in terms of infrastructure with bank debt or more conventional debt. We've done that in the past. We previously had a loan from BNP Paribas a few years ago now, which was intended to build this processing plant before the permitting issues reared their head. So going back to banks to secure debt for the infrastructure development, once the project's up and running, we've got stable cash flows, we've got production history, makes much more sense.
How does that make you feel? Because this is a company, you've built up a business which doesn't actually have much debt. In fact, have you got any debt at all?
I mean, it's down to sort of just below £50,000 at the minute, which is quite staggering, because I mean, a year and a half ago it was £12 million, and the company had no route to market for its gas. We hadn't signed the ENA contract yet. The share price was around half a penny, and the company looked to be in fairly severe trouble. We'd just been knocked back on the IPPC permit. So things were looking fairly bad. But since then, we've signed the ENA contract in July of last year. We've raised the money to pay for all the infrastructure. We've recompleted the 2 wells, which are quite difficult, high pressure, high temperature wells. They were successfully recompleted. We redeveloped the existing infrastructure at the CPP, which was fairly old technology, needed to be refurbished carefully to ensure we stuck within the existing regulations. We've rehabilitated and recertified an export pipeline that hasn't operated for 10 or 20 years. So we've done an awful lot operationally and financially over the last 18 months, and we find ourselves now generating revenue, virtually debt-free, and looking forward to the next phase of the project.
What do you say to investors that have been in the stock a long while, that have been diluted down, they've seen the share price pull back? Yes, you're right, it's an awful lot better than it was this time last year. But what do you say to your long-term shareholders and those wanting perhaps maybe dancing around the edge of the stock, not knowing whether or not it's the right time to get in? What do you say about what's in the share price at the moment and where the company's going and your expected trajectory for shareholder value?
Yeah, I mean, the company has had a long history, and we've been in this project for 10 years now, and I've been involved for 4. So there are shareholders who have been in for the full 10 years, have seen a bit of a roller coaster. I think people who have been over the last 18 months have seen the share price rise 4 or 5 times. And what's in the share price at the minute? Our broker in Nomad, WH Ireland, has a target on the share price of just over 3 pence. And they've an upward limit, I think, of unrisked about 6p. So there's a lot of room to grow within the current share price. The project itself, we're just into the first 2 wells. This is potentially a 15-well project. We're producing sort of 3 million cubic feet a day at the moment. We're hoping to get up to 35 million cubic feet a day. So there's a lot of room to grow within the current share price. And then there's a lot of opportunities for the company to grow within Slovenia and within the region as well.
Well, I was going to ask about that as well, because you're supplying to Croatia at the moment through this pipe. But then, of course, presumably your main market is ultimately going to be Slovenia.
Yes, I mean, ultimately that's what we want to do. We've been applying for this IPPC permit, which will allow us to build our own kit and put the gas into the Slovenian grid. Slovenia imports 99.9% of its gas at the minute, so they'd really love to have their own gas going into the grid. It's been held up by 1 or 2 individuals. So the long plan is to sell into Slovenia, but the way we've set up the infrastructure in regards to Croatia, we can continue to sell to INA for the foreseeable future and to increase that production whenever we're able to.
Okay, let's come a little bit closer now and ask you where the company goes. We've got the back end of this year, of course, 2017. You've said this is a transformational year for the company. As you say, you've been involved with some number of years now. What for 2018? How are you going to be describing 2018 when we talk this time next year?
Certainly, we'll have a year's stable production, and we'll have money being generated in cash in the bank. We'll then be looking forward to, hopefully we'll have the IPPC permit in our hands, and we'll be progressing the infrastructure to put the gas into the national grid in Slovenia. I hope we're also talking about new wells at that stage, but where we're going to go, we're on PG10 and PG11, so there's 9 other deep wells in the field that have produced in the past. Our idea is to go into, or the plan is to go into some of those wells, recomplete those and get those producing. So hopefully we're giving shareholders by this time next year a very clear idea about where we're going in terms of our field development plan in Slovenia. And also then maybe we're looking further afield as well. We've got ideas to grow the company within the region, within Slovenia and within the region. I think we're very well located geographically on the border with Croatia, Hungary, Central and Eastern Europe. I think the appetite for onshore gas is huge, and it's a good place to be.
Good. Okay, well, good place to be. We'll leave it there. But thanks indeed for joining us, Colin. Colin Hutchinson, CEO of Ascent Resources, a company just having started on its path of production.